The other benefit of issuing preferred shares are cash flow. So there's tax advantages with the dividends. The company gets tax benefit from that, and so do investors. Dividends are taxed different in a better way, and there's a preference in dividends and assets and wind up also. If the company goes bankrupt, then they don't have to really pay the dividends or pay the preferred shareholders also. The danger is that the purchasing power risk is there, and then there could be increase in interest rates. If interest rates go up, remember we said bond prices go down. And same thing here, if interest rates go up, the preferred shares, their value also goes down. Dividends could be passed over also, it's possible. So that is, we'll talk about, there could be cumulative, and the company also could fail. So those are the reasons why it's dangerous still. So with the preferred shares, there's a par value. Par value is like suppose $10 or $15 or $20 per share is a par value. And there may be a maturity date, there usually is no maturity date. And then voting rights, so there's non-voting if dividends are paid on schedule. So in the preferred shares, we said no voting. In the common shares, they have voting rights. If the preferred share is cumulative means adding up. It means that if they don't pay a dividend in 1 year, it will accumulate in arrears, and the preferred shareholders must be paid the missed premium, missed dividend before they pay out the next year. So, or before they pay out the common also. So cumulative means that any missed dividends are added up and then they will be paid out. The redeemable call feature is similar to the redeemable bond feature also we discussed in bonds, that redeemable means that the company cannot cancel the preferred shares at any time or before maturity. And with the sinking or purchase fund, the company will set aside some money every year to buy back the shares in the market, and that is called a sinking or a purchase fund. There are many types of preferreds in the market. We were just talking about the general ones, but there are retractable ones, which in these ones, there is like a maturity date. And the investor can force the company to buy back at a specified time and price. So retractables have a maturity date, and there's a date when the investors can force the company to buy back them. The convertible ones mean that you can have a preferred share and you can convert it into common shares of the same company at a specified time and price. And the variable rate they have a dividend, and the dividend changes based on interest rates. And then there are foreign pay ones, which pay the dividend in foreign currency. It could be in US dollars. So as we discussed all these different types of preferred shares, this is a good summary of those also, and some other ones, the different types. So straight ones are straight preferreds, those they don't have any end date, they give a fixed dividend, and if market interest rates go up, the price of the shares do go down. So if market interest rates go up, the share price goes down because they behave like a fixed product. It is a hybrid type of investment because you are getting a fixed dividend. The convertible means that you can convert it to common shares, as we mentioned, and the conversion price is fixed. The retractable ones, the shareholders can force the issuer to buy back at a fixed price. And then there are some called soft retractables. Value may be paid in common shares or cash. And then the dividend in the floating rate or variable, we said the dividend depends on interest rates in the market, and foreign pay pays in dividends in foreign currency. The participating ones may get an extra also dividend. And then the deferred preferred, they mature at a future date and they're sold at discount, meaning you buy it at a lower price and then they mature at par or equal price, and you don't get any dividend tax credit from them. So this gives you a summary of the different types of preferred. There are many different types. Some of the features of them are mentioned here.